All right, everyone. Welcome to the first roundup edition of On the Bell Curve. This is a mixing of my two worlds here. I've got co-hosts Mark Yusko and Michael Anderson. Guys, welcome to the show.
Oh, thanks for having me. Good
So,
day to be here.
Yeah, what do you guys want to talk about? Should we something happen?
Pretty slow week. Look, we got to talk about this. We got to talk about this. Although I went back to the Genesis block. You know, yesterday was block 1 day. Today is run in Bitcoin day. And has something else happened today? I've been kind of out of the thing with my wife for her birthday. And what happened today?
Yeah, we did it, baby. We did it. Mission accomplished. It's like George
Mission
W. Bush.
Accomplished.
Mission
big
accomplished.
Banner.
No, we got the ETF approved today. A whole bunch of them. Mark, you alluded to this, but there's a sort of a poetic resonance here. This is actually 15 years to the day that Hal Finney tweeted out running Bitcoin back in 2009 on Jan 10. So definitely, if you've been in this space for a little while, if you've been tracking this, you probably feel a little goosebumps. It just feels cool. It feels right. And at 4:30 today, after like 10 false starts, we actually finally got it. Even at the last minute there, they posted something on the SEC site. They took it back down. Yeah.
Crazy.
It's like,
crazy.
Fellas, let's
I counted at least four false starts on that.
Yeah, I agree.
Over the last couple of days. Pretty bad.
So it bears reading here. We're going to get into the details about this and try to speculate a little bit on what the short and long-term implications are. But before we do, I thought it would be funny. Did you guys actually have a chance to read the statement from Chair Gensler?
Bits and pieces.
All right, let me read the, so he starts off, pretty boilerplate saying the commission approved the listing of a traded number of spot Bitcoin exchange traded products, et cetera, et cetera. Basically, I'm going to paraphrase here, said he was strong-armed into it by the courts. Here are a bunch of risks. And this
in
is
the announcement, he said the word strong-armed. Yeah. Really?
I'm paraphrasing a little. I'm paraphrasing a little.
Okay.
But here, I'm gonna end with a quote here. Though we're merit neutral, I'd note that the underlying assets in the metals ETPs have consumer and industrial uses, while in contrast, Bitcoin is a primarily speculative volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. While we approve the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin. Investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto. Sounds pretty freaking neutral.
Wow. I wanted to post today, but I like I said, I was out of the office and in the car, but I really wanted to post to all the naysayers and doubters and it's going to zero and it's only used for terrorism and Jamie and Nuriel and Peter and all these guys. Like, at what point do you just say, guess I was wrong? This is real technology. This is here to stay. There has to be a point at which, being wrong is not a sin, right? We're all wrong all the time. Staying wrong is a sin. When you can't admit that you're wrong, it's bad. It's very bad.
We even had Jim Cramer come out and mea culpa earlier this week. So, it happened. It can happen to anybody.
That's right. Bolt from the blue. Lightning strike.
Yeah. No, it's a really cool. I want to get in and talk about some of the implications of this, but I think just taking a step back, Bitcoin's not that old. Bitcoin is about 15 years old. It's a bootstrap non-sovereign form of money. And without any formal coordination around like a company or anything like that, just 15 years later, look at how far we've come as a currency. It is we've got a
trillion. Just let that sink in for a second. We're about to hit. I'm not sure we're quite there yet, but we're getting close. 910. So we're about 9% away from $1 trillion market cap, from literally zero, right? When Hal Finn sent out running Bitcoin tweet, the price was 0.00013, whatever it was. It was zero. So from zero, from nothing, we now have nearly $1 trillion asset, to your point, Michael, with no central authority, no permission, no CEO, no marketing department, no property, plant, and equipment. In the olden days, if you wanted to be a big company, right, companies that we would back as venture capitalists, you had to control stuff, cars and trucks and machines. And no, now it's all about networks and relationships and technology. And so I just think it's an extraordinary thing. And I think that the real problem is, until you have that light bulb moment where you really understand what triple entry accounting means, it's hard, right? It's hard until it clicks. But once it clicks, you can't unsee it. You can't go back to the old world. You can't imagine a world where for the rest of your life you'd have to ask permission to use your assets. You have to pay money every time you try to get your assets back from storage. I was thinking about this the other day. I was in a mini mart or whatever, in the ATM. And for most of us, the ATM fee is just a nuisance, right? But what about someone who's taken out $20? $3.50 on $20, that's a usurious fee. That is a usurious fee. And so I don't know, it's a really interesting dynamic that now we have this way that the three of us can exchange something of value without asking permission, without asking Uncle Gary to say, yep, you can do that, or Uncle Jamie. I guess Uncle Jamie more than Uncle Gary. Gary's not a banker. Thankfully, he's not a banker. God, would that be awful?
I was just going to say one interesting piece of trivia that I learned about Gary Gary Gensler. Sorry, that was a real slip up. He used to be Mike Novogratz's boss in the HK branch of Goldman Sachs. Did you guys know that? I just found that out last night.
Did not know that. Did not know.
I think that's the funniest thing on earth.
The history of GG is interesting and scary at the same time. If you go back and you look at where he's been and how he's climbed the ladder, there's some scary elements to it that we could dig into, but we have to wait till Sinister Saturday for that.
Exactly. Yeah, we'll give the people what they want. Sorry, Michael, I interrupted you. What were you going to say?
Oh, no. I was going to say I was looking at a chart recently that had the top 15 most valuable assets in the entire world. Number 1 is gold, to be expected. Number 15, and this was prior to the last couple of days, was Bitcoin. There was silver in there, but everything else was a multi-trillion-dollar company. And Mark, to your point, those are companies that control distribution, they control assets, they control. Have tens of thousands, hundreds of thousands of people working for them. I do think it's pretty amazing to just take a step back and think, what are the most valuable assets in the entire world? And we're broaching top 10 at this point.
Yeah. So let me ask you guys, where do you think we go? Where do you think we go from here? And I'll break it into like a short term and long term, maybe time frame. So one thing that I thought was kind of interesting, and when we got our false start last night from that prankster or potentially criminal or intern or whatever it was at the SEC, that we got the tweet. It was interesting to note the what happened to the Bitcoin price. It obviously spiked really rapidly, but then it sort of fell lower and stayed low. It was kind of interesting to note actually that ETH actually outperformed there, and ETH BTC saw a notable bounce off of what was probably the bottom, and ETH has continued to perform decently strongly. So not to make it all about price here, because I want to get your guys' take on flows and everything like that. But what does this initially mean if you're an investor kind of sitting on the sidelines here? Is this the firing gun? Has this been priced in, and the inflows and the run up in price is largely what we've seen? Do we move on to the next narrative? ETH, I'm kind of combining a whole bunch of questions into one, but like, what are the proximate, like, what do we do now?
No, yes, no.
It's like Nick Saban. He says he takes 6 hours off when he wins a national championship and back to work the next day. What's the next asset? I think, Bitwise actually came out with some pretty interesting survey data that they did with some of their financial advisors a week or two ago. And of their providers, 39% said that they expected that there would be a Bitcoin ETF approved in 2024. Obviously, we can check the box, 61% were wrong. The other number was, I think it was 18%, said that they had intention to, but had the ability to buy Bitcoin for their clients, which means the reciprocal of that is the ability to buy it and actually hold on to it on behalf of their clients, which is what these financial advisors are doing. I think what we're going to see is, number one, the whipsaw that we saw, rocket up, rocket down, just this general skepticism that even at the 11th hour, 11:59 p.m., we could have potentially still been rugged. There was still that opportunity. People were skeptical. Nobody really knew which end was up with all the fake news and fake tweets and everything that was going on, false starts. But now it's official and we can kind of check the box. I think the real work now begins. And that's the education process of getting the advisors on board, there's rumors that BlackRock has $2 billion in seed capital waiting in the wing to start trading tomorrow. We'll see what some of these inflows are over the next week, month, first half of the year. But I don't think that this is like a great, we moved on 1 week later. And I think this is going to be a longer term process, and it's just the beginning.
Yeah, it's just the starting gun. I mean, there's so many things about this with one caveat that I'm going to come back to that I kind of just learned about this morning. And I should have learned about it a month ago, but I wasn't paying attention. But to the point on advisors, right? Advisors, Merrill Lynch, UBS, et cetera, Schwab, Independence, control about $30 trillion.
Yeah.
Okay, it's a big number. Mm-hmm. And the average advisor today has sub 3% exposure to cryptocurrencies. And the vast majority of that is in companies like MicroStrategy, et cetera, that own it. They don't have any, obviously, ETF because the ETF doesn't trade till tomorrow. 91% of advisors say their most important asset for managing client assets are ETFs, not mutual funds. That's 20 years ago. Not single stocks and bonds. That's 30 years ago. It is ETFs. And so when you combine an underweight, a massive underweight to digital assets, whereas, the vast majority of that $30 trillion has zero exposure, right? My whole thing, get off zero. So the vast majority have zero. And the other thing in the survey was that 25% of advisors have been asked in the last month about crypto. So at least 1 in 4 just this month has been asked, hey, why aren't you buying me crypto? I hear there are these things coming out. So all of that conspires to, let's just do simple math. Let's say it's 10 basis points. Okay, it's a reasonable expectation. Just dip your toe in, 10 basis points. That's $30 billion on an asset that trades $8 billion a day. Now, to Michael's point, if BlackRock does have the $2 billion, which I have no doubt they do, and they try to put it all in tomorrow, price can jump a lot. We can't take I actually think $3.5 billion is going to trade tomorrow. That's been my number for a while. At day one, $3.5 billion will come in. That's a problem. So, a good problem. But the reality is it's not going to be 10 basis points. Let's say it's 100 basis points, 1%, which is not a crazy number. Now you're talking 300 billion, not tomorrow, but over some period of time. Again, to Michael's point, it'll take some time to educate and have some fancy ads and all that good stuff. But I think the really kind of amazing point of all of this is once UBS and Merrill put it in the model portfolio, it's over. You don't have a choice as an advisor to not have it, right? As a fiduciary, as a member of the team, you have to do that. Now, there's no, in the old days, it used to be you had to buy the one that they got paid the most by. So a little kickback going on. And that may still happen. But now you got 11 choices. And there's going to be money that's going to go into these things, and it's going to be big. Now, the caveat that I'm nervous about, that I spent a lot of time doing some research on today. I don't know why I missed this, but they're releasing another freaking futures contract tomorrow. That is bad news. That is very bad news. And it's a big liquidity pool. So it's CME, and the guy who runs the CME is not our friend. So let's just put it lightly. And I do worry that spoofing, right, which is what they've been doing to gold forever, is going to start. And so that's the one little caveat that I think its number go up for a while, but the ability for spoofing now gets exponentially greater because the liquidity pool for futures, and what I mean by spoofing is you can basically go naked short in the futures market, right? That's why, when they issued the first futures contract in 2017, what happened? Boom, market went down. First futures ETF went down. Here's a crazy stat. BITO raised $1 billion on day one, 950 million, call it $1 billion. Today has $2 billion, despite the fact that they're down 31% since inception. And they were down 75, but they came back a little. But so think about, that's a crappy structure, right? It's got negative roll yield, all the it's a crappy structure, bad performance, and yet it still attracted more than $2 billion because the billion turned into 300 million, and then they raised another probably billion, and that then doubled. I guess they raised about 700 million, and that doubled to 2 billion. So I don't know. I'm a little nervous about that.
Let me ask you guys this. I'm cheating a little bit because I recorded an episode with James Seifert earlier today, but it's been a big content day for your boy. But what do you think, similarly to, when you're trying to get an understanding of how the market is going to react to something, there's the sort of absolute, like in an earnings release, like of a stock, there's like the absolute performance, but then there is the market expectation. And generally there's some sort of consensus out there about the opinion. And it's actually sometimes less about the absolute performance as opposed to the relative performance to expectation. And I'm trying to get a sense of, obviously I think we'd all probably be in the boat that in the long run, it doesn't really matter what, these trade on a first day sort of basis, but it might have shorter term implications. And do you guys have a sense of what the kind of yardstick is, or a sense for market expectation for, I don't know, flows on day one or week one or whatever, and, the implications of exceeding or not exceeding whatever those expectations are?
So I don't have any yardsticks per se. And, it sounds like Mark, with the 3.5 billion, I'd like that call. I may ride on those coattails of that number. But the way that I think about it is sort of like, where is the market in terms of general excitement in the short, medium, long term? Right. And I think one of the things that happened with, frankly, the Matrix Port analysts that put out that report, whenever that was, a week ago, a couple days ago, it re-rated everything. Open interest dropped, the RSI dropped. Some of the trading metrics that we would track just to kind of sense, overheat, underheat, or hot, cold in any given market, flipped very, very quickly from potentially overheated into something that was cooler. And so I think we went into this process with a little bit more of, as market, a little bit leveler head than we would have if we were overheating at that point. And I know everyone was kind of talking about, buy the rumor, sell the news kind of thing. Dan Moorhead said, buy the rumor, buy the news. So, we'll ultimately see who ends up being correct on that. But I do think that, one of the good things that happened was just the re-rating over the last week, because it just flushed out a ton of stuff. And there were a ton of liquidations, and then the fall starts, and now we're here, and it's kind of like we can take a sigh and just say, okay, we made it, finish line accomplished. Let's see what happens tomorrow.
Yeah, I mean, really, really important insights. And look, we had two flushes. I mean, two serious liquidity flushes in the past week. One on the matrix port, and then the second on the oops, put in the wrong day for the tweet, or whatever it was. I don't really care, but actually I do care, because I actually think it was intentional. I actually think it was a trial run for what's going to happen tomorrow, which that's the sinister part that scares me. I actually think it was a trial run for the short side.
How many think, Mark, who do you think looks bad in this situation? This has been an internal Blockworks discussion when this happened. Who do you think looks bad? The SEC, crypto as an industry, or just nobody looks particularly good? It's just a little bit silly on all counts.
Well, absolutely, the SEC looks idiotic, right? I mean, you can't even protect your own social media account. And the thing that's so funny is when they tried to make it about crypto, say, look, the crypto market is manipulated. Like, really? If you did that same thing with Microsoft or Nvidia or any other public company, the same damn thing would have happened. Don't say that was a crypto thing. That was a Wall Street thing. This was like when FTX went down, and they're like, it's a crypto problem. I'm like, no, that's a bad person doing bad things problem. That had nothing to do with crypto. I mean, that's what the guys in the SNL crisis did. That's what the guys in the junk bond crisis did. Bad people do bad things. So I think crypto, they try to make us look bad all the time, right? Because
we help them out.
No, we do.
We help them out on occasion.
Look, we help them out. We have a lot of colorful characters, and
or at least we did.
Well, that's a very good point, Michael. They are less, right? I mean, the early days. I mean, think about the early days of the Puerto Rico conferences and the crazy stuff that was going on, and you read the Bitcoin billionaires and the bake room and all that stuff. So you're right. There are fewer colorful characters. It's more serious now. We have real people in the bit. But ultimately, the reason the media, which is controlled by the same people that control finance, are going to paint this industry negatively at every chance is blockchain technology and crypto, Bitcoin, et cetera, does to financial services what the internet did to media and commerce. Full stop. And there's no way to stop it, right? I mean, we've talked about this ad nauseum on Saturdays, is banks had an 838-year run. It's over. Now, it won't end tomorrow, but the 838-year monopoly on trust, it's over. I mean, it's over. And so as we do the X, right, as we go from one monopoly to another monopoly, which is sound real money, which can be cool in the future, that path is going to be rocky, and it's going to be dotted and littered with these attacks. But clearly, the SEC, I mean, they literally look like a clown show. I mean, there's no other word for it.
Let me ask you guys this. So one, I agree with that on a long time frame. I mean, crypto, blockchains in general are highly disruptive, and to your point, traditional media has never really given social media a fair shake, and there's some legitimate reasons for that, but a lot of it is because it's a threat to their income and business. The one thing I'd be curious about is, people have been talking about the institutions coming for as long as I've been in crypto. The herd is coming, they're 6 months around the corner. I remember I listened to some of these guys that are very famous in crypto say 6 months when I first got in 6 years ago. Pensions are here in 6 months. But the
herd is here.
Yeah.
Herd is here. I told you. This is what I have. I have this under my computer, my real high tech stack of National Geographics. And it's just funny that it's the herd, right? The migration.
As an aside, for an early marketing campaign for what was going to be DAS 2020, we actually had this whole campaign baked out. The herd is coming, and there were going to be these like thundering buffalo with like but anyway, I thought that would have been, maybe we should use that for this task. But I think one
Can
thing
we
that
get
might
those
be,
hats like from the Flintstones with the water buffalo horns? You know
hey,
that you guys are too young to know. The
Michael's my
Flintstones.
merch guy. He's got the hookup on all the good merch. So we'll have to talk about him with cooking something up.
Right. While you guys are talking, I'm gonna Google the. You guys have no idea what I'm talking about. The Flintstones was this cartoon show, but
I remember Flintstones.
Oh yeah,
all right.
no, I know. All right, so let me get your guys' take on this. So in 2020, it was a seminal moment when post money printer go burr meme, Paul Tudor Jones came out.
We got to get those hats right there.
That'd be good. Yeah. Those would.
Although it's funny.
We're gonna write these ideas down,
for the first time. Doesn't that hat kind of look like the Masonic symbol? That's kind of interesting. I never noticed. I never knew that Fred was part of the Knights Templar. That's kind of interesting.
I didn't either. Yeah, good for you. He was a multifaceted man, that Fred. So basically, Paul Tudor Jones, when he came out and said, "Hey, this is Bitcoin is the fastest horse," that was a stamp of institutional credibility. But one of the things, so we opened this podcast by saying Bitcoin has no marketing department. But I am starting to wonder if that will change slightly, because as we've already seen from companies like Bitwise that have had these great ads around the Bitcoin ETF. And I feel like we're going to start to see first call it a scramble, but eventually a pretty vicious brawl for assets and liquidity.
Oh my gosh. Well, two things.
A really competitive
that's
game.
Going to happen. But how many millions, literally tens of millions of dollars of free advertising was this SEC debacle worth?
Oh.
I mean, seriously,
that
was a very big ad campaign. Positive, although some would say, well, that's negative. No, it turned out positive because he had to give in. Like I say, whether strong-armed or not, that's a very big ad campaign that just happened for free.
I would even say it starts way further than that, back from that, which is the Grayscale decision and all of the Twitter musings, James Seifert, Eric Balchunas. It was been covered on Bloomberg for the last 4 months. When else has there been a story on Bloomberg about the potential approval of an ETF and have it be something that gets covered every single week?
Only maybe with marijuana, maybe cannabis, maybe, but only for a week. But not for months. Definitely not for months.
It's a really good point. There's been a lot of earned airtime around this, and Larry Fink did a couple of rounds of CNBC, notably after the some of the geopolitical strife going on in the Middle East. He called crypto a flight to safety asset. So, and the incentives here of BlackRock are, we've talked about this on a couple of past pods. Bloom has gone off the ESG rose, so to speak. They had a lot of, that was a little bit of a loser for them. They've started to backtrack that pretty steadily, and now they're backing another horse, which is the Bitcoin horse. And it's their incentive to go out and say, hey, actually, Bitcoin is not just used for money laundering. And actually the data hasn't supported that, has never supported that.
Never.
And
not ever.
I feel like there will be maybe an interesting diffusion of opinion among institutionals, where there are some that have always kind of got it. And they've frankly been in the industry for a while, but now you're going to see the incentives tide start to turn. And now that there's a way for them to frankly profit off of it, maybe the tune might change a little bit. And this could be the first real institutional cycle. I mean,
that's a great point, Michael, in the sense that, I saw a lot of, depressed tweets today from the maxis who were like, this is the saddest day in Bitcoin's history. And, we're giving up everything we worked for. And I'm like, okay, stop for a second. Yeah. Okay. What you believe, right, as a full-on maxi, right? Self-sovereignty, hold your keys, not your coins, all that good stuff. Yes, that is not going to happen tomorrow. But did you really ever think it was going to? I mean, really? Did you think we were going to go from pure centralized to pure decentralized? Like that? That was never going to happen. There was always going to be a CeFi stage. Now, it's not going to be permanent. And because here's the thing. Yes, boomers like me and my brethren and sistren, okay, they're going to buy the ETF. But then they don't own Bitcoin. Okay, fine. When they pass, which all of us will, God willing, someday, we'll all pass. And $37 trillion is going to y'all. 37 trillion, not all of it to you two, but a lot, it's going to your generation.
Let me go in there for a second. I thought we were getting 37 trillion.
But that's 37 trillion. And guess what's going to happen? Some percentage of it then is going to leave the ETF and get converted into self-custody, or maybe someone will come up with a way that you don't have to memorize your damn seed phrase, and you don't have, there are some things we could do as an industry. And they're like, no, it was that way to the beginning. Come on. It doesn't have to be the same way as the first day, right? And it will change. But to make this out to be negative, I mean, I tweeted out the supply demand, aggregate demand, aggregate supply curve today, right? It's pretty simple. We got two things going. We got a demand shift. Any way you look at it, there's going to be more demand for spot Bitcoin. Unlike the futures, unlike, anything, increase in demand. So when the demand curve shifts, P1 is higher than P0. That's guaranteed. Right? There's no debating it. Okay, that is absolutely guaranteed. Then we have a supply shock. So we have a supply shock coming. So now the supply curve moves. Now P2 is higher than P1. And so I don't understand why any maxi who already owns their bag would be unhappy. I really don't understand.
Yeah.
Yep. My thoughts are 100% agree with everything you're saying, Mark, and Econ 101 would suggest that we've got a lot of things that are up and coming still, and we haven't even started trading yet, right? One thought that I had, Mike, is just like tying a lot of these things together. The institutions have been coming since 2013 when the Winklevi put out their first Bitcoin ETF proposal. Then we had, I think it was 2016 with the Enterprise Ethereum Alliance, and we've been just kind of chipping away at this institutional block of marble for the last 10 years, give or take. And I think the major difference now is that we finally have, to your point, an incentive model for how institutions can actually interact with these ecosystems. And the late great Charlie Munger, show me the incentive, I'll show you the outcome. I truly think that that's one of the most apt business adages in history, and we are now on the precipice of being able to say, okay, these players now know how to play in this market, and it's maybe not going to be as an AP in one of these ETFs, and it's not going to be as the custodian partner in one of these ETFs, but maybe they're going to start to look to things that are further afield. And like we said, this is just the start. This isn't the end. And we're going to see more products come online. We're going to see more regulatory approvals come on. We're going to see more institutionalization. And it's not, the total disintermediation where all of these media companies with the advent of the internet just go away on one fell swoop. They're going to fight tooth and nail to be able to figure out how they can survive in this new world order, and probably participating with incentives is going to be that new world order for them with these new decentralized technology platforms. When we were raising, I think it was our second fund, we spent a bunch of time with BNY Mellon. We walked them through what it was like to take out a loan on Maker, to borrow money on Aave, to do a swap on Uniswap, and part of their minds were just like blown as we were just walking through. There's no counterparty, there's no this and that. All of us know this stuff. But the problem that we kept running into is there's no way for them as a registered bank to actually be able to make any of those transactions or do anything on chain. The maximum that they've been able to do is custody Bitcoin for clients. Yep. And that's it. And I see this as kind of the step in the direction of us getting from where we are right now, with institutions maybe being able to play in certain ways, and more approvals, regulations, positive trajectory there is going to get us to the point where, they can actually be interacting on chain and DeFi. Such
an incredibly important point. I should make you say it again so everyone listens the second time, because that is the key, right? Is Bitcoin in and of itself It's this amazing thing. But if its only function is to sit on a ledger and bury it in the backyard, we can all just go home and go back to our old jobs, because we already got that. That's gold. And gold won't, decay buried in the backyard like a ledger might. So that isn't what this is all about, right? What this is all about is establishing the base layer of money, replacing gold as the base layer of money in every financial institution in the world, every central bank, every, centralized organization and decentralized organization. But the migration from centralized to decentralized is not going to happen immediately. But every time we introduce new companies to facilitate new technology, that's what I love as a venture capitalist, is there are people building these solutions to help cross the chasm, right? Because if you're a bank and you're saying, well, Jesus, I don't really like this, the fact that I'm not necessary now. Michael can lend money to Michael without me. That's not good for me. Okay, well, how do I get in the middle of this? Okay, maybe I can be a custodian. Maybe I can be a record keeper. Maybe, they're going to be functions. And at least in the short term, there's going to be some role for fiat. Believe it or not. I know you guys understand this, but the average, and sure. It's kind of like energy. Right? There's this whole thing about, we got to go electrification of everything. Okay. When? Like 30 years, 50 years, 100 years? It's going to be at least 30, probably 50, maybe 100 before we don't use oil and gas. Think about it. I mean, here's the crazy thing. We burn more coal today than in 1900. Before electricity and all the stuff that was going to replace coal, but we still burn coal. And we shouldn't burn coal because it releases all kinds of bad stuff, but we should burn natural gas instead. But I just find so much of this incredibly compelling when you just don't expect it to happen overnight. And I'll say the thing I don't like about what just happened in the past week, this race to the bottom on fees, bad decision. That was a very bad decision.
Why? I feel like that's a win for consumers, don't you think? Getting
Nope. Because these people won't have the resources to invest in the technology to make the UI UX palatable for their people. See, here's the thing. It took 80 years for mutual funds to go from 100 basis points down to 30 or 40 basis points. It took 20 years for ETFs to go from, 60, 80 basis points down to, 2, 3, 4 basis points. Free isn't the right price. I get in this argument with Jack Mullers all the time, right? I can take my Strike app and I can send money around the world for free. Free is the wrong number. You need to make some money so that you can invest in the technology and scale and don't have outages and don't have. So anyway, I just.
Let me ask this. Do you think that there's an indirect business model? In so many of these, ETFs, maybe not with Bitcoin per se yet, but, the ability to lend it, obviously we won't have staking, if you have the ability to stake an asset eventually in an ETF, maybe there's an indirect model.
Yeah.
But do you think that that's a viable option?
100%. No. Look, that is the issue, right? I mean, if you think about Robinhood, how does Robinhood make money if they don't charge commissions? They sell your order flow. Okay, or they lend your securities, both of which have issues. And if you've watched the movie Dumb Money, which I'm all over telling everybody to watch the movie Dumb Money, it was so amazing. So good. But think about that. To your point, Munger's point about incentives. If I don't make any fees, then I'm incented to lend out the securities or rehypothecate. This is what Caitlin is all over, right? They're going to be forced to rehypothecate and forced to do all the things that we don't want them to do. So look, I get why they're trying to do it. We've lived in the world the last 10 years where it's grow, give your product away, and then figure out how to monetize. Well, that works if you're a monopoly. This is not a monopoly.
Can I poke at that?
Sure.
Because
Sure.
honestly, like, let me try to paint that in a more positive light. Because honestly, I remember when I was first getting into this industry and people were talking about the ETF back then, there was a large contingency of people that I don't see this viewpoint expressed anywhere anymore, which is just like, this is kind of pointless. Like, the whole point of Bitcoin is that it's extremely fungible, very easy to send
Yes.
around the world,
Yep.
easy custody. In a sense, I feel like we have, and people used to make this argument that actually the whole point of an ETF, an exchange traded fund, is that it's an advantageous structure and wrapper compared to trading baskets of stocks, right? So that makes a whole lot of sense. I think if we were to really look at this from first principles, it actually doesn't make a lot of sense to try to jam Bitcoin into an ETF. If anything, you've just put more permissions around it. And I would actually say that these
100%.
ETF issuers are charging exactly what the value that they create, which is approximately zero in the long term. Like, they're not,
But it's not
like,
zero. No, it's not. Why? Here's why it's
on
not.
a long time horizon.
No.
They are
What's
just
the
wrapping
NPV?
Bitcoin in the TradFi L1, and it's a shittier version.
I
So
know,
it's
but
ultimately,
what
there's
is?
not, I don't
I
know.
agree with you if everybody were perfect. If there were no lost seed phrases, if there were no misplaced ledgers, if there were no stolen passwords, what is the NPV of the amount that will be lost, stolen, obliterated
I agree with
if
that.
people who are not sophisticated try to use sophisticated technology? It's
That's a good
not
point.
zero. It's not zero. And so I don't disagree with you that in first principles, you're 100% right. And the maxis are 100% right. I'm agreeing violently with the first principles, but we're not there. And the people who own the assets ain't there.
Yeah.
Those 65 to 85-year-old people
I'm with
are
you.
not capable. And I'm coming up on being one of those, and that's not a criticism of them. It hasn't been necessary to be competent in that. And it's, I don't know. I always use this as an example, right? I don't know how this
Getting mocked by
works.
the chat. I don't know if you guys want this. What these people are saying is making me laugh. I appreciate y'all for really listening to us here. Mark, I'm gonna take back what I completely agree with you. And I meant in the really long term. Obviously, they're creating an enormous amount of value right now, and this is super significant. And I like, maybe to focus us a little bit on like this coming year. So we've got the ETF, which is this catalyst that we've all been waiting and talking about quite a bit. Actually, not that the price is, super important and this could change, but it has started to move. We're at 47.5 or just under currently. So starting to catch a nice little bounce. We are also going into this, Mark, you were indirectly alluding to this, I think, the supply shock of the halving, right?
Yeah.
And we're getting at our back this tailwind, which is the Fed is starting to talk about rate cuts. And that's starting to become much more consensus too. And, I'm just kind of looking out at this year being like, we got some tailwinds. We got some tailwinds, baby. And the last thing that I'll say is I haven't felt any degree of FOMO. We've been talking about this for months. I've talked about this with both of you guys. Like, I feel like I have started to check the charts again. Like, I've started to feel the first beginnings of euphoria FOMO, but none of my normie, I haven't gotten one text. I haven't got one text from a normie friend.
I think I said this on Bell Curve. I said, if you were to go and poll my friends, I live in San Francisco, Mark, and if you were to poll my friends, 7 out of 10 of them would have no idea whether or not Bitcoin was at 10K or at 100K right now.
Yeah.
Guaranteed.
Yeah. And that's amazing. But I was there for the holidays. My son and daughter-in-law live up in Richmond, and I agree with you. Right? There was nobody talking about the ETF. They were talking about the Warriors and how bad they are, which they're bad. I mean, I was surprised how bad they were. Maybe Draymond will help when he comes back, but I totally agree with that. And as far as the tailwinds go, the tailwinds are about to get big. I mean, I'm doing my 10 surprises thing tomorrow that I do every year. And one of them is I'm doing Rolling Stones songs this year for my 10 surprises. And one of them is Start Me Up. So Money Printer is going to get started up. And it's going to be big, like big. I mean, here's a stat that you won't believe. 30% of bank equity is unrealized losses on treasuries.
Yeah.
That's 30% of bank equity, which does that mean the whole banking industry is insolvent? Well, yes, that's what it means. And Caitlin would tell you that it's been that way since day one, and it's been that way for 838 years. But no, because the Fed opened up the temporary, I love that part, temporary lending facility. And so that's skyrocketed. But the money printer is going to start going burr. That's big. The risks of recession, a year ago, almost 100% of economists said we were going to have recession, and we didn't. This year, almost nobody's talking about recession. Everything is soft landing. It's all good. And yet I have this whole series of
I don't love that
charts that there's some ugliness out there. Like when we did the show last week, right during the non-farm payroll, and it was the headline beat until you looked into it. And actually in December, we lost 700,000 household jobs. I mean, that's a gigantic number.
Yep. Mark, you sent me some great tweets about this, but let me see if I'll see if I can find it. But Eric Basmajian put out a great, there's the non-farm payrolls, and then there was like the household survey.
Yep. That's what I'm talking about.
Wildly distinct numbers. And I've given him a couple shout outs recently, but Joseph Wang, I think, has done one of the best jobs in covering this, had a really detailed analysis of the slowing labor market, and actually talked about that being more of a driver in rate cuts than almost anything else this coming year. So what is
the last thing on that? You know what the difference between the Fed governors is on year-end rates in the dot plot for 2025? So we're talking 2 years, so this year and next year. What do you think the highest Fed governor is saying rates are going to be, and the lowest?
Oh, that's a good question.
I think next year it was supposed to be down, like 50 basis points for the highest, and lowest was like 2.5, maybe 3.5, something along those lines.
Yeah, so is that 3.5? 2.375 was the low guy in 2025, but the high guy or gal, I guess it could have been a gal. When I say guy, I mean guy or gal. Was 5.375. Right. That's 300 basis, and they're on the same committee, looking at the same data. And one is saying we need to cut to emergency levels within 24 months, and the futures are pricing in 5.5 cuts this year. I mean, wow,
doesn't make much sense. The somebody said it. I can't remember. It may have been Jim Bianco said that outside of January, that would mean it cut every single meeting in 2024.
Yep.
And it just doesn't feel like we're quite at that point yet. So maybe the market is expecting something that, once again, is going to be proved to be slightly different.
Yeah.
It's going to be interesting.
Let me ask you guys this. So again, I'm cheating a little bit and referring to this interview that we just did but Eric Balchunas and James Seyfert of Bloomberg have been probably the two most sober analysts or analysts that have
the party
been
that's going on at one of their houses tonight.
Oh yeah, I hope we don't lose them. I hope they stick around now. They've been a nice addition to the.
Hey, we've got ETH coming up in May.
Yeah,
exactly. Balchunas has been tweeting about this literally for 10 years. I mean, he tweeted about the Winklevoss application 10 years ago.
He's got one of my all-time favorite. I'll plug this episode that he did on Invest Like the Best 4 or 5 years ago. It was a really in-depth, still to this day, if you want to understand the guts of how an ETF works, go listen to this interview. It was a phenomenal overview of it. But to skip ahead to give away some alpha in that interview, I asked him what is your, he did a great job of outlining there's a distinction in between flows and AUM, right? And one of the big differences in between flows and AUM is the performance of the underlying asset. And I didn't ask him to actually break out how he got there, but his prediction end of year was 50 billion in AUM. And so I was sitting there listening to that being like, I bet my forecast for what Bitcoin does is more aggressive than yours. So in my head, I was kind of like reverse engineering. I mean, there was a very realistic world where we end up with a collective 100 billion plus, maybe by end of year, or certainly by, I don't want to say certainly, but very realistically by 2025. I mean, these are very large numbers. What
That's
do you
50
think?
billion of flows and 100% price appreciation.
So,
Yeah.
That's it right
So
there.
that's the important part, which again, what people just are not paying attention to. This is an asset that for the last year has traded about $8 billion a day. It just traded 23 billion in the last 24 hours. So that's 3 times. Now let's triple that again, because we haven't even started trading yet.
why not?
So let's triple that again.
And let's start putting out 11 different companies with their own marketing campaigns, some of the largest financial institutions in the entire world, getting bombarded at every single airport with the wallpaper that you're going to see walking down the terminals, every single NFL game that's about to be starting with the playoffs, every single place you're going to look, there's going to be some ad for Bitcoin. And you've seen a little bit of that with like GBT. I've seen a couple of grayscale GBTC things, and here and there, and obviously you've had the Coinbase and the FTX, previous commercials, but nothing as voracious as this, I think.
Voracious is such a good word, because it is not only is the voraciousness of the advertising going to be unbelievable, but the voraciousness of the buyers. And again, I searched on the comments, but man, they're coming in fast and furious. So if they don't like this, they can crucify me there, but I won't look at them. So the boomers, right? And I speak for the boomers as a boomer. They're going to buy because they don't control their assets. Right. This is the part that people aren't really paying attention to. It's not your uncle and your grandpa. It's the financial advisor. Now, many of them are boomers, but not all of them. There's some young financial advisors, some actually really good ones on crypto Twitter. But those financial advisors, the boomers who have built multi-billion-dollar books in some cases. Like I have this duo, these 2 guys that I've worked with for years. They have close to $30 billion in assets between the 2 of them. That's two financial advisors. And if they say, yep, 1%, that's a lot of money. And that is just coming. And so, and that's the difference. It was like, buy the rumor, sell the news. This is just like when BITO got approved. It is nothing like when BITO got approved. Not anything. Because you can create a futures contract out of thin air. You need no underlying asset. As long as we promise to settle up before, I don't have to go get the asset. And that's why commodities historically get manipulated when there's an excess of paper, whether it's paper barrels of oil or paper gold or paper Bitcoin. And that's, I will argue, what triggered the down drop. Now, it was the normal cyclical drawdown in 21, but it was exacerbated by BITO. And this is different. Every time, even though they're cash created, and people don't understand how you create a ETF, share, but even though they're cash created, the underlying has to go get Bitcoin, and they got to go find Bitcoin to get. Now, clearly, Uncle Larry and a few others have been acquiring a few in these big accounts, and there's this CC15. Is it CC15? There's this great. I can't remember his name. I think it's CC15. He's been following these dozen or so wallets, basically buying 100 billion a week, 200 billion a week for the last couple of weeks. I think those are clearly owned by entities related to these because they needed to ensure that there was supply that they could get to. Because if BlackRock has $2 billion that has to get filled, they ain't buying that in the spot market.
So actually, one of the things that I heard, I think it was James talk about, or maybe it was Eric, was there's a huge difference between something that is seeding the fund versus flows into the fund.
Yeah.
And from a performance perspective, everybody gets benchmarked against the flows into the fund. And so while there may be, idle capital that's sitting by, I know 200 million was set aside for or seeded in the Bitwise.
Yep.
There was I think a 10 million that was in the BlackRock. I would imagine the 2 billion maybe isn't coming in on day one, week one. Who knows how long it'll take?
No, that's a really good point. I think that was absolutely not the seed. Usually you seed an ETF with 100K, 200K, sometimes $1 million bucks. 10 million was actually a huge seed. The 200 million that Bitwise announced, I mean, that blows your mind, because you don't need to seed with that much. I mean, you literally can seed with a few 100K. So that 2 billion is definitely not day one. That is flows. But I believe they needed to have access to Bitcoin, because they're, part of the problem is there just aren't that many coins that are available. Now, one curious thing that could happen is if I were BlackRock and I knew that there were 620,000 Bitcoin sitting in this trust in Cayman, I might actually acquire that. So I would not be surprised. And that might be the reason that GBTC didn't lower their fee like everybody else, because they're like, I'll just take whatever fee I can get while I can get it, and then I'm gonna have to sell to BlackRock anyway.
One note on that fee, the 1 point, because I think that surprised everyone. 150 basis points. I mean, that was just so out of line. But if you think about it, first of all, who knows what relation, what constraints Barry has and DCG and Grayscale have on, there's a lot of contingencies there, but the simple arithmetic, and if you listen to James and Eric, they'll talk about this. The simple arithmetic is, first, they were charging 2%, 200 basis points before. So they're about to get at least, 90% haircut to their revenue here, depending on where or 80 to 90% or whatever, depending on where they end up. And it actually might make sense for them to just say the math sort of works better if they keep the fees high and just say, okay, we're willing to surrender half of our AUM even.
But they won't. See, that's the thing. They definitely did this math. If you're in a taxable account, you're not selling.
That's probably what it is.
Because all of that money came in between 10 and 30. The vast majority of GBTC came in that bubble from 10 to 60, but most of the money came from 10 to 30. If you're in a tax exempt account, an IRA or something, that's gone, right? That'll leave tomorrow because there's no tax. But I think that's a small percentage. And the taxable stuff, you're not going to move and pay Uncle Sam to save 1%. You're just not.
The other interesting theory that I think James purported was, and they've seen this before with a few other, GLD is a good example, where that is actually a pretty expensive product relative to where the rest of the gold ETFs are trading. It's highly possible that Grayscale goes out and creates a lower expense ratio product that will be sort of the sidecar to the GBTC product. And I think they also own BTC ticker. And so maybe they have GBTC and BTC as the two different tickers. And the people who are stuck because of taxes, they're going to keep in the high fee, fund, but then other new entrants are going to come in and maybe they're going to undercut everyone. And maybe once again, that becomes the indirect business model for Grayscale. If you have a 10, 15, 20 BIP fund, it's pretty attractive.
Yeah, no, it is. It's a great point. And look, without those revenues, they would be in a world of hurt, like serious world of hurt, because they've got lawsuit problems and all kinds of stuff. But they need those revenues. And Barry's already, he said, you can pry it from my cold dead hands. He's not selling. I don't know.
I had this thought at one point, like 2 years ago, in like 2021 during the height of it. I was just like, these people looking, I mean, because at that time in 2021, your mind frame is like, this stuff's going to keep going up forever and yada, yada. And I remember looking around at these people that had like $5 billion. I was like, so is this guy, is this, these people are all just going to have like $30 billion. This just can't can't front. But to your point, like he just built this amazing asset in the form of Grayscale and GBTC, and look at how sticky that AUM has been and what a fee driving machine that has been. So, props to them.
Absolutely. And look, they, a year ago, we talked about this on the show. A year ago, they needed number go up, and number went up. Right? It went up more than 100%. And if it hadn't done that, they would have been done in May of last year. They would have been out. Yeah. They wouldn't have been able to pay the debt. And the other thing that didn't happen, and again, we could go down this whole rabbit hole if we wanted to, but they were at risk for a clawback of 2 bills into FTX. But because Solana and all this stuff is pumped, the trustee hasn't gone after the clawback. Now, the history of those clawbacks isn't really big, so that we wouldn't really know if they could get away with it. But that was a big risk, because there was precedent to say anyone who took money out within 90 days were clawing it back, and it was within that 90-day window. But had that happened, it would have been game over.
That's what Celsius just said to creditors. Within over 100K within the last 90 days that Celsius was around, you have to give the money back. So it's interesting. FTX is different.
Yeah. Really. Look, FTX is amazing. I mean, the amount of money that's going out to the lawyer and the consultant and the pump that's going on in FTT. I mean,
did you guys know that there was an FTT ETF?
Yeah, you know what?
Today I learned that.
That's right.
I'm sure I knew it at one point, but I was reminded that today there was
I forgot about that. And in fact, I think I own a little piece of the company that has that.
There you go.
Forgot about that.
I actually love I like the company anyway. But so maybe in closing here, I'd love to get your guys' updated sort of. I think there are kind of 2 ways to bucket market catalysts, which is the one type of catalyst that kind of adds fuel to the fire, and one that could potentially completely turn around a market. I don't really know where to bucket the ETF, because it's obviously a massive deal, both in terms of what it means historically. Well, one thing that we didn't really talk about as well is I think this removes the discount factor that you might have had to apply on a big regulatory crackdown, i.e. making Bitcoin illegal, right? Like if you were thinking about, I have to make the case for owning Bitcoin, there are these pros and cons. One of these sort of far out cons, but I mean, it has happened in the history of the United States, is to make owning an asset illegal. And you should have probably been applying some kind of discount rate to that. I'd have to imagine that discount rate goes lower.
And that's okay, but I don't want to go too far sinister Saturday, but it's only Wednesday. This approval makes the potential likelihood, I'm not saying the likelihood, but the potential likelihood higher, not lower.
That's because it's easier. It's custodied with the big guys.
Because the logical next step we're in the then they fight you phase. And everybody's like, oh, we won. No. We won this battle, but the war ain't over. The then they fight you phase is going to go on for a few years. The thing that Ms. Warren would like is to ban self-custody, right? And basically say, if we don't own it for you, then it's bad. And therefore, if you self-custody, you are a criminal. That could get passed. I mean, that's been written in bills, and that's the first thing. I'm not worried about it, but I think about it. The second thing is, Max Kaiser has said, you guys don't understand. This is just a ploy to confiscate it. If you look at the prospectus, they're allowed to confiscate. He's right. He's technically right, but here's why he's not right. Just like the 51% attack, I think might be the greatest programming feat in all of programming history. It's a big statement. Why? Because the moment you do a 51% attack, you spend $100 billion to do it, the price goes to zero and everything you just stole is worthless. So it'll never happen. There's no incentive to do a 51% attack because you would destroy the asset. That is genius. So whoever thought of that, kudos. So that's the first thing. So the same thing is true here. If you think about the Satoshi quote, yes, there will be lost and stolen Bitcoin. But he said, think of it as a contribution to the community because the value of the rest goes up. So let's just do the math. Let's go crazy. Let's say that the boomers buy into this boomer wrapper, this ETF, and 20% gets 20% of all the Bitcoin in the world. It's not an unreasonable number. Let's do that math, right? 300 billion comes in, okay? Price doubles. That's 2.4 trillion, okay? They got 600. That's 25%. So they get 25% of all. That's 25%, not 20, 25%. So 25%. Okay, government confiscates it. What just happened? The value of the 75% just went up, and those people got more powerful. As long as there is one Bitcoin in the hands of somebody else, you can Satoshii it, right? You can divide it, and it's the network. And this is the difference. The coins, they're important, but the network is what's valuable. And that's what's missing here. Is they confiscate all they want, but they'll just make it stronger. So I think Max is wrong on that.
Those are really good points.
Yeah.
I'd say the big thing in my mind is this is actually probably the start of the positive trajectory. And I know it's an election year. We'll see what happens with, what's going on in November. This is the start of the positive trajectory in the public's eye or in the electorate's eye and the lobbyist's eye and the donors' eyes of where we want the U.S. to shape up in 2025 and beyond. And I think we're going to start to see a lot of positive movement on the regulatory front because everything we've been talking about, we now have financial institutions like BlackRock with the financial incentive to be able to support this, promote this, market it. And I think we're going to start to see a lot more of that. I don't know if we're actually going to get anything passed in 2024. It might take another Congress, another group of people to be able to get that stuff done. But I think this is the start of that. And so for that, I'm once again, we're at the start, not the end. But for that reason, I'm incredibly bullish.
Great point.
Yeah, I've got nothing but to agree with that. I think it's been a trying last few years, as these bear markets always are, but I think the industry has emerged stronger with more. I feel like I've said this a lot recently, but with more reason to be optimistic than.
I know. Yeah, here's the thing. I tweeted this the other day. So someone asked me in my Twitter stream, "How bullish are you?" And I actually said I had to stop. Like, I don't know. I mean, I actually don't feel any different than I did in 2013. Now, in 2013, I was an idiot, right? I was handed it on a silver platter, and I was like, I don't really understand this. I kind of get the technology, and I did some work, and it took me a while to kind of get there. But I don't feel any different. So I'm an 11 out of 10, bullish, because this is big.
Always on, baby. No days off.
This is huge. This is an acknowledgement that, yes, all the people say, this is just a speculative asset. Yeah, it is. It's like any other asset. It can be speculated on. Great. And that's just the opposite side of a hedger. But what this says, right, again, we didn't need this validation, but it is a validation of the technology. And the idea that we're increasingly going to have people hold the capital T, capital H, capital E solution to money. It's ginormous. I mean, it's ginormous. And so if you can't be just monstrously bullish, like crazy bullish, like euphorically bullish, they're just not paying attention. And that doesn't mean, you put all your money in, but you got to have more than zero. And you got to put, and the younger you are, the more you should have. But it's just, I don't know. This is a time for celebration. It's a time for acknowledgement. It's a time to say thank you to Jameson Lopp today. I mean, the cypherpunks that started this and worked for free and built this out of nothing. And there are a lot of other people, Adam Back and others. Thank you. And to all the miners, the guys and the gals out there installing the machines. And, I saw a guy sliced his finger off, literally sliced his finger off, installing, the metal racks. And he's still out there. He's got his hand bandaged up and he's still installing the machines. Like, thank you. And to all of the people who have endured all the cyclical downturns and the people who tune into these shows and write in comments, thank you. Because this community is just going to get bigger and bigger and bigger. Mm-hmm. It's not just going to be us talking to ourselves. We're now talking to everybody. And people actually listen. And they won't just say, oh, that's stupid. They'll actually say, oh, that's a really cool idea. I get it. I get it now. The light bulb went on. So, I don't know. It's a good time to be alive, right?
It's a great time to be alive. Yeah. All right. Well, cheers, guys. Cheers to many more bullish shows in 2024. Appreciate you guys doing this. Amen. All right, guys.
Thank you.
Have a good one.
Great day.
Be well, everybody. Happy Bitcoin Approval Day.